You're listening to the audio portion of Workshop Wednesdays. Workshop Wednesdays is a free live discussion about topics affecting accountants, bookkeepers, and business owners. You can join the ABO group in Facebook to participate live Wednesdays at 10 a.m. Pacific Time. Just search for ABBO in Facebook. This podcast is brought to you by Schoolofbookkeeping.com, where you will learn, grow, and build a thriving bookkeeping practice. We have hundreds of lessons with almost every aspect of the industry. Start your free month today at Schoolofbookkeeping.com.
Well, welcome to another Workshop Wednesday brought to you by Schoolofbookkeeping.com. As always, my name is Dan DeLong, and I'm here with Carrie Khan. We're from School of Bookkeeping, and this week we are joined by Vikram over at File because we are continuing our series of expense management fundamentals. And as I read the title of what we're going to be talking about today, it doesn't seem like it's very fundamental, but it is talking about addressing some of the issues of traditional expense management software, right? Like tracking your expenses, which is really what it boils down to, is being able to, track where the money's going and, what else, Vikram? That's really it, right? I mean, you really want to know where the money goes.
As a business owner, it's a challenge to keep up with all those receipts and stuff. It's not. It should be fundamental, and it's not. It's not easy without a plan.
Absolutely.
I mean, when you are initially starting a business, right? Obviously, first step, business bank account, and then typically there's a business credit card that goes along with that. Is that kind of in your realm, Carrie, of how you started when you started a business? I mean, you do those things first, but then as you grow, it gets more complicated.
Yeah, because when it was just me, I knew what I was spending my money on. I knew how to code it. It was just me. But when I added employees and they had to, run to Office Depot, it was still simple. But when we traveled, it got more complicated. And, it's a lot of cleaning up and a lot of work when that credit card receipt comes in. What do you do? What do you code it to? Who did they take them out? There's a lot that you don't realize as you grow quickly.
And Vikram, what do you see from expense management solution standpoint? Like, at what point where it becomes, I got this as my business owner hat with multiple hats, to the point of like pulling your hair out to manage it? Like, is there a number of card holders that you have or trying to maintain, or does it vary business to business?
Right. Yeah, no, I think, first of all, thanks so much for having me over, and good morning and good afternoon, everybody. So yeah, I think from where we left off as well, Dan, it's a very good segue into where we're getting to today. In fact, we were talking about in the previous sort of webinar around what is the right time and to explore an expense management solution. And when do people actually tend to have issues around managing the credit card reconciliation, as well as, managing the receipts and issues with coding it and so on and so forth. Right. So I just want to sort of bring up a slide to talk through some of these things, and also cover aspects about what are some of the options that are out today? What are the different one can look to handle the issues around this not only from a credit card reconciliation to out-of-pocket expense. Both of these are sort of problem to deal with as the company's scale. Once you're able to see my screen, sort of.
Yeah, I think you're cutting in and out, but we'll certainly make do with as best as we can with the stream here. But go ahead.
Got it. Got it. You should be able to see the screen that says recap, and then talking about some of the things that we discussed during the last webinar. So, as to your point, I think the issue is when the organization starts to scale, and that could be two ways of scaling, right? It could be one wherein very few people are spending a lot on a variety of different things, or there'd be more and more people. When I say more and more people, in excess, anything in excess of about 3 to 4 people in the company will lead to some amount of confusion on who's spending on what, especially when people are authorized to spend on behalf of the organization. And in most cases today, we do trust our employees with some amount of, spend, authority, so that they're able to operate independent of um, the business owner, and they're able to address the needs of the business as quickly as possible. Right. This is true, especially in certain types of industries as compared to the others. Professional services, field services, construction, hospitality. These are some industry verticals where we've seen this can spiral very quickly into issues, simply because there are people on the field. Multiple people need to spend on behalf of the company. They're always working with clients. They're working on projects. They're working in different locations. So it can get very, very complex very quickly.
Yeah, I'm just thinking about, our assistant here, Landon, right? These days, everybody's spread out, like, we're all over the place. And then just, Landon's going to be, having a lunch date with with someone, and, how do we manage that reimbursement, right? Is it something that goes out of pocket and then we reimbursement him, or do we have a card that he could actually use, in order to do that? So that's just like an example of, trying to, and here I'm trying to put my hat on of like, okay, well, how do we actually do that?
Right.
In order to, in a simple way, that's not, obviously I could, sign up for a credit card and then get him a card, and, those types of things. But, what you have over at File is actually, it's something a little different, where it's easier to manage, right?
Yeah, absolutely. And you can manage with your own existing cards and still have an automated workflow and the benefits of superior software and automation that can help
Well,
manage
now
this.
when you say you can manage it with your existing cards, like what does that entail? Like, does it mean that, as a business owner, I need to have a business credit card for, for employees to use, or is it they use their own card that they have, and you just tie it to the expense management solution?
Both the options are possible, right? So we have been very conscious of being card agnostic, to the extent that if you already have a business credit card that you use for your business, and these days it's very simple and easy to add more cards to it. You manage a parent-child relationship that you were discussing earlier on. I think about 2-3 webinars ago, through 3 Wednesdays ago, right? How do you manage the parent-child relationship of card programs in QBO? Tying it back to that, it's fairly simple and easy to get these add-on cards these days as a business. And most banks also offer the ability to set limits in terms of what's the maximum spend limit you want to spend, you want to allow for a specific card. But I think we'll get more to that as we get along, get
Okay.
through the next couple of minutes. So I think what we were sort of discussing last time was the need for having a solution which can really help solve for the credit card reconciliation process. And what we've seen in the last 2 to 3 years now, the pandemic has actually accelerated a lot of the need for automation. And Dan, what you were talking about, Lyndon, is exactly what a lot of organizations are facing today, right? I mean, gone are the days when people, all of them who are working on a specific or in a specific organization, go to one single place to work from. We are more distributed than ever today. And this is especially true again for some of the industry verticals that I spoke about, because none of those functions actually can stop, regardless of whether it's a pandemic or, in fact, those field functions continue to operate as they need to, right? I mean, but then there are some of the functions around back office functions and the central office functions which can go remote, and that is exactly what has happened today. I mean, we live in a different world from what we were in like 2 years ago, or 2-3 years ago, right? People prefer to work remote. People prefer to work from different locations or across the country. There is an immense amount of load on accountants to be able to manage everything that they were previously, but in a very different world, right? And I think a solution like this, or an expense management solution, comes in very, very handy, especially in a distributed world like today, right? In addition to that, providing better employee experience, faster receipt collection, more visibility into the credit card spend. These are some of the things, and eventually, we are able to reduce the time and effort required by accountants by a large percentage. Just to give you some high-level numbers there, we are able to bring down the effort required by the accounting team by 2 full days per month to under 3 hours in a single month, right? So that's the kind of impact that a solution like this can have.
Yeah, well, like some of the challenges that that accountants and bookkeepers have. Like I was just talking to somebody last week, and they were talking about their workflow, and when it comes to entering in bills and those types of things, they get sent an email with the bill, and then she goes in and manually puts it in, and I'm like, why are you not sending it to QuickBooks, right? Like, why? Because she didn't even know that was even an option. And that's one of the things I think is part of the discovery process of using an expense management solution, is that one of the core functionalities that most of them will have is the ability to forward bills and expenses and receipts to to an email address, and then with automation and the OCR, we'll talk about that, what that actually stands for, with the ability to read the receipt or the bill and make extract data out of that, is almost a core function of those solutions that are out there, right, Vikram?
Yeah, absolutely, Ed, and right on. I mean, I was just wanting to talk also about what are the different ways in which people address some level of automation, some level of digitization of the whole process, right? And a very rudimentary way of dealing with it is exactly to your point, build up spreadsheets where you can track this information, collect receipts on email, or probably like what we were discussing last time, shoe boxes full of email, receipts being sent to accountants at the end of the month to try and manage this process. This also means that all the coding needs to happen manually into the accounting software, right? So some of the drawbacks of using a spreadsheet, I mean, it's okay to do that as long as you don't have scale, right? but it's really difficult to sort of chase employees to capture these receipts. There's a high level of fraudulent transaction, or if there are charges that are being levied multiple times on the card, it's almost very difficult to find that out, right? This is one way of dealing with it, right? The second type of solutions that we've seen more recently are bank-provided software, right? There are some.
You're talking about the financial institution, a Bank of Chase or Bank of America. They're offering some way to manage that.
Correct. So there are very limited banks today who do have the ability to track receipts. Some of them have launched even mobile apps where you can click photographs and then track these receipts. But then I think that that's a great way to sort of match the transactions to the receipt. But what's lacking in that is, one, it's a very, very clunky interface. I mean, large banks, have launched these solutions, but it's very, very clunky and very difficult to use. That's one. Employees, the functionality is literally just taking a photograph and then attaching it to the transaction. Employees need to do that manually, right? So find out which is the transaction, which is the photograph that they need to click, and then match that manually there. Also, it's almost in a silo, right? I mean, it's not really connecting to anything. It's just right there, capture information, right? But then if you think about the logical flow of where this needs to land, it ideally needs to reside in the accounting software, which
Right.
is even audit ready, right? So I think there are some challenges, with the solution that is being provided by some of the banks, but I think they are moving in the right direction at least, right? So that's
Yeah, I remember when American Express, came out with their, expense management synchronization to QuickBooks, and it almost felt like it was an elitist thing, like, because American Express just fancies themselves different than anybody else anyway, but
right.
they were doing things so totally different at that time that I think at that time it caused more confusion because they were trying something new, and then it didn't allow any insight because it didn't come into it pushed it into QuickBooks, so you were managing the expenses and everything through the Amex website.
And yours
Yeah.
truly was on that team with American Express, and we gave all the feedback about what was wrong with it, and they didn't take any of our suggestions, and so it failed. I don't think it works today.
No. Well, most of the fees that are there into QBO today are also broken, right? I mean,
Mhm.
there's a genuine problem there, because most solutions that are feeding in today from most of the banks use some kind of an aggregator mechanism, and most of these aggregators use screen scraping to get the data off the website, the banking website information. And every time there's a small change made on the banking site, it all breaks. So that's a big challenge, to be honest.
Mhm.
Right.
So you got a term on here. I think we want to unpack fintech solutions. What since we're talking fundamentals, what
Right.
What
is a
is fintech?
fintech?
So yeah, I think there's this new breed of solutions that are out there, which are essentially software companies who are financial technology solutions, who also issue their own cards. Now, you have a whole lot of them out there in the market today. Some of the leading ones, out there, issue their own cards. They are coupled with superior software, which is easy to use. They do auto matching of transactions, and they also provide visibility on the spend data, more granular visibility on the spend data as well. And some of them do have rudimentary ways of integrating into an accounting software as well. But I think the underlying thing there is you have to switch cards. And
So
the
to
reason
get the
why,
most out of it, you need to be on their platform, and just everything all together, not just using what you already have.
and it's not about getting most out of it, but that's the only way to do it.
Ah,
The,
the only thing, the only way.
Well,
So
that's how
the reason why,
American
yeah,
Express was. You couldn't get any of those benefits with a different card. It was use their card or no benefit, and it wasn't even that great.
right. No, absolutely. And the reason why that is so is because they are based on the interchange revenue that, they base everything on the card and the interchange revenue that is made by the issuer, right? That's their business model, right? It's not the software, but it's more of the transaction fee that they get. And for that to happen, you have to use their cards,
Uh-huh.
right? And that's where the challenge is. And you know, was there a question?
Oh,
nope. No, I was just putting out in the comments here, just to kind of the people that are attending, what are they finding that they're using most these days to manage their expenses? Are they in the shoebox range, or are they in the the solopreneur, single expense credit card or debit card management, or are they in the doing it from the bank side of things, or where do they find themselves these days?
Right, right. Yeah, no, absolutely. And you know, these solutions are great. The challenge there is, as I said, you have to switch cards, and mm, these are not really credit cards; they're charge cards. What that really means is there needs to be a float of 75,000 to about $200,000 sitting in a checking account from where you're allowed to draw. And a majority of the small medium businesses in the U.S. work out of credit, right? They need that float, they need that credit to be available to them.
So
Um,
that's an interesting point. I think I'm gonna kind of unpack that a little bit. So the difference between a charge card and a credit card. So explain that a little bit more. In order to have a charge card, it's essentially uh, something that guarantees that they'll be able to use it like a credit card, but the funds are not actually going on credit; they're going against this float that you're calling it.
Absolutely, absolutely. So the way it works is there is no underwriting or collateral security there, right? So you're not really checking for the traditional banks have mastered the art of checking for the credit worthiness and taking those risks and issuing the credit card after the due diligence and going ahead with that, right? Whereas the fintechs today, um, they don't have the mechanisms nor the ability to sort of manage the credit and the risk taking appetite like the banks do, right? And for that reason, the way the fintechs operate today is ask you to put in some amount of money in an account which they have access to draw from, and based on that amount of money is how they are able to allow your employees to draw from it, right? Now, there are variations of that. One of the variation is, 1 day credit, which means you're allowed to be given a credit, but then within 24 hours, that amount is debited from the data account that they have access to, the bank, the fintech has access to.
that's
Not
like
much
a
of a
debit
float.
card.
Right.
Jeez.
That's what Susan said in the chat. It's like,
Yeah.
this sounds like a debit
Jeez.
card.
Absolutely.
Yay,
Absolutely.
Susan, we're on the same track.
So I think the if you were to compare that with a traditional credit card issued by a bank, you have up to 30 or 45 days of credit, sometimes even 60 days of credit, which is available, right? And that allows the small businesses to sort of work through the credit cycles, and that it just means there is additional float available for the business to take on more, and then probably do a better job of managing the cash flows, right?
Yeah,
Susan
because
has.
I mean, if you had to, Carrie, if you had to earmark 75,000 just for card charge cards, that
Could be
would
our
probably
business.
put a damper on the cash flow situation
It
for
would,
you, right?
we don't have 75,000 sitting in a, buried somewhere in the backyard. Tad, to Susan's point, we all have a knee-jerk reaction when things sound and feel like a debit card. My husband uses it at the pump. I don't, because I'm scared it's gonna get skimmed. There's just we're used to the float. Give us a float.
Right. No, it's also about the risk, right? I mean, if you're able to quickly claim, an issue with the transaction, or I mean that goes a long way as well. And the other thing around it is, and today, if you look at most of the fintechs, very popular ones, most of them are operating this way, right?
Okay.
This works for a specific type of customer or company. If you're a well-funded startup in the tech industry, or any industry which is a well-funded startup, you have money sitting in your account, investor money sitting in your account, which you can use for float, it's fine. But most SMBs are not in that category, right? So that has been one of the biggest issues around doing that. In fact, we at File did consider launching our own cards, and we would have to take this route to do that, to issue a card. When we spoke to a lot of accountants from various accounting firms, the feedback that we received was, you're not going to solve a problem for the SMBs. A majority of the SMBs rely on the float, rely on cash flow, right? It's not. It may solve the problem for a specific type of industry vertical, but if you're looking to solve the problem for the masses, this is not going to cut it for them, right? And so we stayed away from that, and then we in fact decided to be card agnostic and work with the banks instead to enable superior functionality of what a fintech solution can offer with the existing cards and the solutions that banks are providing today, and it can be any bank.
So you're
Right.
you're kind of like the best of both worlds, right? So you have the functionality of these charge cards without them needing to switch cards.
Absolutely.
And I wanted to pick up on this fundamental thing too. You said SMB. Let's tell the audience. We have new
Small
people
and
that
medium
might not
business.
understand the term, so.
Yeah, no, absolutely. Small and medium businesses.
Okay.
Yeah. And there's also the element around rewards and loyalties that you built with your bank, which you need to give up if you have to switch cards. A lot of these, at least two of these fintechs which started ceased to exist today in the last 2 years. So imagine losing your loyalty and your rewards, working with large reputed banks, and switching to something like this, which will go out in thin air in a matter of years. That's a situation that you don't want to be in as well. So yeah, that's another reason why some of these cards may not be the best, or card issuing fintechs may not be the best solution. So what is probably the best solution out there, right? I mean, or what is a viable solution out there that exists today, right? An expense management solution, a software which works with any of the card solutions or card programs that are issued by the banks, truly card agnostic. That's perhaps the best of both worlds, to your point, Dan. Solutions which allow receipt capture in real time is a big advantage, because you're not losing context of what the spend is for, right? So imagine, to my point last time, you're walking into, let's say, Home Depot. You're a contractor, you walk into a Home Depot, you swipe your card, you need to charge that to a specific project. As soon as you swipe a card, you get a text message on your phone asking you to submit a receipt against the charge. You take a photograph of the receipt, respond to that text message, it's automatically coded on your behalf. Now, that is simple enough because you don't need to learn anything new for somebody who's on the field. And it's also very powerful because you're using the existing Home Depot card to get your rewards and to have the loyalty in place. At the same time, you're in context. You know exactly what's happening right there. You don't mind taking a photograph of the receipt, throwing away the receipt in the bin, and you're done. Right? So that can be very, very powerful. So that context is very important, and doing it in real time has seen a big jump in the amount of time people spend in chasing for these receipts, or accountants spend in chasing for these receipts, right? And if the solution can have an OCR and automated expense coding, that's and I think on the cake there. If it can also check for compliance checks and fraudulent transaction detection, and if it can go through managing your workflows, that's even better. Just as the employee gets this information and notification on their phone or their text message, the administrator can also get a notification if there is anything out of bound that has been spent. So you can immediately register for a claim or a verification of what the transaction was with your bank, right? So that's also possible there. While doing all of this, I think it's really important to get insights of who's spending where, on what project, on what category, who's the vendor, who's the merchant that is being spent on. Are there limits and budgets that can be set up to oversee how people are spending across the organization, and also reporting this in a way that's easy to understand, at the same time powerful enough to bring out some advice for the business owners, right? So that is something.
The question about fraud when we're talking about these fintech solutions, in that situation where there is does it make any difference when you're using it as a charge card versus a credit card? Does that, if there is fraud on the card, how does that fall in the protection for the victim of the fraud, or does that make any difference regardless?
So, yeah, it mostly depends on the kind of credit that's associated with it. And if there is no credit, then you're not bound by the the standard sort of issue reporting that works for standard credit cards. So it really depends on the type of card it is, right? So if you're using a charge card, obviously it's not a credit card in the true sense. But having said that, you do have the ability to set up limits on the charge card. The challenge there, however, is by setting up these limits, you're restricting your employees from spending. On paper, it's a nice to have thing to have these limits so that your exposure can be limited to certain employees. But the challenge is, imagine somebody who's to the same example of Home Depot, where somebody needs to buy some equipment for a specific project, an infrastructure project, let's say, and they walk in there and the card doesn't work. And the only way to get that working is to contact whoever has assigned you that card to make that change.
Increase your
And
limit.
imagine that other person is golfing somewhere, and with no chance or no opportunity to make that change right there. You're stalling that project by a day, right? And that's the kind of impact that it can have, the negative side of it. So practically, it may not be a viable option to sort of set these limits and manage it that way at all, right? You trust your employees to use, and that's the reason why you're issuing the card to them. And so it really may not make sense to address the fraud, use case over there.
Got it.
All right. I think in all of these, as I said earlier, maintaining a rich audit trail and also pushing all of these details, the coded information into the accounting software is probably the end result or the goal or the objective that most accountants benefit a lot from, right? Because at the end of the day, that's what is the single source of truth that you're going to look into as an accountant, as a business owner, as an auditor, as a taxman as well, right? So I think that becomes very important to have a solution, a system which is flexible and powerful enough to not only push all this information into the accounting software, the right coded information into the accounting software, but also have the ability to bring in those changes if there are some changes made on the accounting software side back into the expense solution.
Yeah, I mean the two-way accounting integrations that you have listed there. I mean that's a huge benefit, right? Like if you make a change in one versus the other, it doesn't matter. They're synchronized, rather than is it sending it over my shoulder, into the accounting, and then if there was a mistake or something, how do I correct that? Do I have to do it in two places, or do I have to do it in one and then it feeds into the other, which is so that's a good thing to make sure that is a feature of whatever expense management software you're using, is that there is a two-way communication, bidirectional.
Absolutely. And if I were to just sort of highlight some of the aspects that you could be looking at when you're looking to choose an expense solution, I think some of the other things that become very important would be how easy is it to use for the employees, for the approvers or the managers, and the finance teams, right? Because if you really want adoption for any software or any new technology or process, you need to make it super simple for them, right? So I think that's one of the key aspects that drives the success of any change that you're wanting to make, right?
Oh yeah, I mean, just ask online competitors of Amazon, right? I mean, if you can't make it convenient, which Amazon has cornered the market on making things super simple. I mean, heck, you can go down to a locker to to return something. You don't have to, those types of things. I mean, they've taken that convenience factor to the next level. So if you have to be easy to use in order to adopt any change.
Absolutely, and I think that goes without saying. Most of the consumer-oriented software and technologies have sort of aced the simplicity, and that's the reason why adoption rates are so high. I mean, if you think about iMessage or Facebook or Instagram or all of these, nobody really taught anyone how to use any of these, right? I mean, you were instantly sort of online, sign up for an account and you get started. So nobody needs to really teach you to use that, and that's exactly what has crept into sort of or the expectation has crept on similar lines for applications that you use for work as well, right? And a solution which can match up to the simplicity and the ease of use is definitely something which has higher chances of succeeding than something which doesn't, that way, right? And to the point that I made earlier, having a truly card agnostic solution really helps utilizing true credit, leverage the relationship that you already have with your existing banks, and also keep the rewards, right? So that's a big advantage of you managing to get a solution which can work with an existing card program. And really the real-time visibility on spend and data, this is often ignored, and this can be very powerful. Just as an example, one of our customers were getting charged about on an average about $80,000 per month from Marriott, right? Across multiple users who used to spend. This was one of the insights that they got, and which helped them go back to Marriott and say, you know what, let's renegotiate terms because we tend to be spending a lot with Marriott, right? So, and this was available right off, a dashboard for them. Which vendor is spending? How much are we spending on which vendor across the organization, right? And instant notifications to employees, as soon as you make a spend. As I said earlier, having that context really helps, right? And it really depends on to what extent you can automate this process. The more, the better. At the same time, not losing control from the perspective of an accountant or a supervisor. I think that's sort of an ideal mix for how much you could look at automating the solution as well, right? And at the end of the day, I think it really matters. No matter what the technology you're using, it really matters who's behind it and what happens when things don't work, right? I mean, no matter how much you want to ensure that technology solutions are fail-proof, there are edge cases. There are definitely use cases which technology may not address, and for that you need people, right? And so I think one of the things that would be good to learn or good to sort of keep in mind while choosing any software solution for that matter is how quickly do they respond, what about the implementation time, how difficult is it to learn, and is there clear and concise documentation and guides available for any software product for that matter, right? So I think with that, do you have any thoughts or comments, Carrie or Dan?
Yeah, I think one of the things that I think sets File apart from any other that I've seen is those two parts about it works with any card. You don't have to change the card, and I appreciate that that aspect, because it's not a complete overhaul of their expense management. It's just augmenting what they're currently doing, as opposed to all right, everybody gets a new card. Everybody
Right.
everybody has to use this app. Everybody, and that's the other thing, is that they're just using their own, the card that they already have, and the the tools that they already are able to use, since they get a notification in their text to
Yep.
take a picture in their text. Everybody knows how to take poor quality photos of their food, right? So they go out to eat. Here's my dessert. Okay, right. Here's the check right next to it. Okay, just move my camera over, and it's the exact same thing that you're doing, is taking a picture of the receipt rather than the dessert. And then that again, you don't have to go into a special app or crop the photo or do anything like that. You're just doing it in something that you're already using the card you're using and the device that you're using in the same way that you're using it.
Yep, absolutely. That's right. Yeah, and
so yeah. So was there any other things that you wanted to talk about on the slides?
no, I think I'm good in terms of what I wanted to cover, and so I think mainly if somebody is looking to sort of switch or looking to streamline their credit card reconciliation process, I think we'll talk a little more about how this actually works in action in the future episodes as well, just to show what is possible, right?
Okay. Well, Vikram, thank you for joining us and working through some of these solutions. Because as people grow from, okay, I'm doing everything, I'm using shoe boxes of receipts, to I've now I've graduated to a spreadsheet, which is a huge leap to do that, but it still has its built-in challenges. But then they're using something within QuickBooks or within what they already know, and now they're getting to the next, the deeper levels or the deeper waters of expense management. This is going to come in as part of the business workflow conversation, and it's something that people need to keep in mind and consider when choosing the right expense management solution. So I thank you for coming on and providing some of this good information for people to keep in mind when they get to that point. Gary, any final thoughts?
Just my final thought is for the pro advisors that are watching, that this is a really neat solution that, for me, I have a hard time explaining what things are until I use it myself. So I encourage you guys to give this product a try just so you can see it yourself.
All right. So we'll see. All three of us should be back on next week. We'll be continuing our topics of expense management fundamentals, and we'll see you. Congratulations! You made it to the end of January. So
yes.
So we'll see you next week.
And I think January had more than 31 days, Dan. It felt like a year.
Well, the first month is actually called Checkuary, where it's the period of time where you write the wrong year on the checks. So that's why January seems so much longer than a normal month, because it throws in that extra time.
Awesome.
All right. Well, we'll see you next time on the workshop, and I hope you all have a great week.
Thank you.
Have a great week.
Cheers.